And every industry, whether you're in software or you're doing physical service or you're, I don't know, you're building, you could be putting light poles in for a parking lot or somewhere.
Right.
I mean, it could be anything. You don't want to be beholden to them and your whole business. And so when you've seen plenty of businesses, they set themselves up failure, they built in the margin, but then now they didn't get paid from that tier company, and that's going to be tied up in litigation, and you're going to settle for less just to cover your costs.
Okay, we're back. If you were listening to the last episode, we kind of got into this separate topic from expanding with bootstrap versus financing, and I think this is good for it to stand on its own. And the question really is, because you kind of opened this door to like, okay, companies that now are established to some degree, few years in, and now they're going for, in the marketing world, the big logos, right?
Yeah.
They're trying to sell the Disneys of the world or wherever. And this is good. This can be good. And I think if you look at other industries like consumer packaged goods, where they're trying to get into Walmart or wherever, it applies kind of across the board.
Yeah.
You're trying to go to that level. It's not a bad thing to do, but what's the cost of taking your business there? That's the question, because there's a lot of cost to you and risk to you as a business owner taking your product or service to that next level. And you hit on one that goes to the idea of cash flow management, and that is getting paid in arrears 30, 60, 90 days. And I think that's a good one to start with. So let's go a little bit deeper on that.
So, I mean, firsthand experience, customers, relatives, family members, and trade, have done plenty of work manufacturing products and services for, companies across all Florida and the U.S. And, one in particular took a job on and was producing, and such a large company, the person that got it approved, great. It was going to be a long-term paid out 60, 90 days. But then when that time comes, 90 days, okay, where's the payment? Oh, I got to get authorized. It's been sent off to corporate. So they give this veil, and it just continues on. And that extra 15, 30 day, ends up can cripple a business.
Yes.
And what happens during that time a lot is you've basically put them in control of your business. You may have only made maybe on that 60, 90 days, you make $15,000, $20,000, but it could be a $200,000
or $1 million. It could be, yeah.
It could be crazy because you've been paying payroll for several employees, ends up, a week service adds up. So really at the end of the day, your net profit could be small enough for you to live on, you're happy, but you put up a lot at risk and now you're getting paid later. And so what I've seen at the end of the day is, they're beholden and they're like, well, we're not happy with the work. And so now it's up to them. You didn't get it in draws. You didn't get it in front. So,
and they've been down this rabbit hole before. You haven't.
Correct.
Right? This is new to you. You're taking on this, and they know how this works. So they know that they can get you in. Not that they're going to be, scrupulous about the whole thing. Like they're not going to, some businesses will.
Correct.
But by and large, they're not going to say, how can we rob these people?
And there may be one technicality that, you missed on and you could have fixed very early on if they would have told you or if they would have brought to you and, they were waiting at the end to sandbag you.
Yeah.
And so,
because on their books, if you look at it from their side, they're trying to do the opposite of what you
want.
They want to push that cost off as much as they can.
And every industry, whether you're in software or you're doing physical service or you're, I don't know, you're building, you could be putting light poles in for a parking lot or somewhere.
Right.
I mean, it could be anything. You don't want to be beholden to them and your whole business. And so when you've seen plenty of businesses, they set themselves up failure, they built in the margin, but then now they didn't get paid from that tier company, and that's going to be tied up in litigation, and you're going to settle for less just to cover your costs, pay the bills, the interest accrued, and
because they know that companies out there like yours want that logo, and they dictate the terms. That's the big piece, because they have in-house counsel. You don't. They created the contract. You didn't. You agreed to it. by and large.
And this is the same way with small companies, whether you're looking to bring on a new accounting software, a new payables vendor.
Yes.
It could be any one of those aspects. Of course, payroll services can lump in a lot of different HR, and they can make a percentage off of, maybe the referral for 401k. And so all these things you've got to be careful and look at and switch out and hold them, because what happens, you sign a contract with them up front, they say, we're going to do this for the next 12 months. We're going to do this 24 months. And then what happens? Maybe you had a good implementation, and then after that you call, you get no service, didn't follow through, but now you're getting recurring, you got to fight for them. So
yeah,
on stuff like that, what I'm trying to do ahead of time is disseminating the contract, listing ahead of time all the points that company must follow through with, and hitting it. You got to prepare from day one like you're going to litigation.
Yeah.
And so from day one on all the vendors, every single one, how are you following through? Because I have to pay you. Mm-hmm. That's great. If I don't pay you, you can turn off services. Mm-hmm. But why is it you cannot provide all these services to me, but yet I still have to pay you now? So, you've got to set it up yourself. Yeah.
So you need to be in control, or at least 50-50 of the terms. The terms need to be, because it can look like, oh, wow, we're doing great. And now we have the opportunity to work for XYZ brand or, big time company. And this is going to put us on the map.
I think businesses have wised up to the fact, at least I know ones I've dealt with over the years, it's like, oh, I did work for them. Now it's not a badge of honor. Now I'm like, hopefully you only did one project because you got paid nothing.
Agreed. Yeah. And the way you deliver services for a company like that might be way different than you deliver services for my company or the next one, because we're not Disney or we're not
yeah.
So that's great. You did good for them, but are you going to do good for me?
Yeah. So I think, if you're going in it and you're wanting to just put that badge on to work for that, it's kind of like joining a Rotary and thinking you're going to get sale or chamber, join it because you want to add value.
Yeah. And I think a lot of companies that take on these bigger clients you need to project out scale, because we put your product in Walmart. I mean, I've just heard so many horror stories of products going to these big box stores, and everything that you're saying, where, they ship all their product. They've done everything. They've worked overnight to meet the scale. And then it sits in a distribution warehouse somewhere and never even sees a shelf. And then that contract, expires, and they never even put it in front of the people. And they still have this huge bill that they have to pay because it was mismanaged from the other side. But if it does get to the actual shelf, now what does that process look like? What are all the takebacks look like? And I mean, there's so many aspects to it that you haven't experienced at the scale you're at, that you need to be prepared. Not to say not to do it, but the preparation needs to be lengthy.
Yeah, that's where you don't borrow on. At least you're not,
Yes.
if you have interest compound in the meantime where you're having that.
Right.
Because ultimately, you want to be in that position of control as much as possible.
In a situation.
You've delivered,
right.
Now here are the payment terms
Yeah.
that you can hold out, and then, nope, this is the expectation, which you sign on, you must deliver.
In a situation like that, I think it makes the most sense, if you have the resources or connections to do it, is to bring in an outside investor that is going to partner with you and knows specifically how that works, right? They know exactly how to take a product into Walmart or wherever and work it through, because now they're taking on, you're giving away a little bit of ownership, but they've got the experience, they've got maybe even the connection specifically. And this doesn't have to be, Mr. Wonderful, but it could be just someone that is a consultant in the industry or works in the industry. Yeah, that's close to that thing.
Because you got to, if the lender doesn't understand the industry and it takes an extra 3 months because something got tied up, they're going to sit there and worry. I thought it was only short-term financing, get out.
Yeah, see, this is good.
Changes their accounting procedures on their back end and how they have to future accrual of the loan, and it changes the terms. So they just want as much predictability as possible.
Yeah, this is good because you always come at it from a lending standpoint because that's what you do. Right?
Yeah.
Like you're looking through that lens primarily, and it's great because that's the whole point of what we're doing here is like, I want to give people that are, just regular people growing a business that perspective because that's so valuable. That perspective, the lens of how a lender thinks goes beyond the application and the salesperson.
Oh, yeah.
And like, there's so much, it's like the little tip of the iceberg there. And so that lens is critical for business owners to see when they're in the mode of expanding and they have big eyes on stuff like this because this kind of thing can just completely tank their business and So I have some friends. We used to live up in Birmingham, Alabama. We have some friends that started a environmental cleaning business or environmental, not cleaning, but like they would do disasters, like a train wreck and had to spill, chemicals everywhere.
Hazmat suit style cleaning.
Crazy stuff. And so they get calls and they have contracts with governments. Well, Katrina came through and they got called up and got the contract to go and be one of, several companies to go help with cleanup and doing all kinds of things. And it was a huge, they're a small company, right? Maybe 30 employees, maybe max, maybe 20, 25, 30. And so they're building and growing. And then they get called up by FEMA. And maybe FEMA wasn't the actual provider of the contract, but the
NGO.
The government, right. And so this was like huge.
Mm-hmm.
And so they staffed up. Just think about a small company putting their money and lenders' money or investors' money. I'm not sure how they did it. Staff up all these high per hour people that they then send over to New Orleans and house.
Now you got to pay housing because they're remote.
So they were scrappy. They would go find trailers and they're super smart people, very successful, all of this. But they had to put all the dollars in front.
They had to fund it. Yeah.
Everything.
Yeah. The hotel needs their money, And
it took them more than a year to get paid because it's exactly what you're saying.
Yeah.
It wasn't even like a 30, 60, 90 day, we'll scoot to maybe 180. It was like crickets. And here they've done all of this work.
Correct.
And spent all of this
and
money.
I bet you at the end of the day, their return probably was crap.
It was. I mean, I don't know the details. I just know from, the side conversations, but yeah, in a way it really made them what they became. They became this
probably well-oiled machine,
superstar company. Yeah. But they had to have a level of resilience to make it through that, both financially and just, the wherewithal to get up every day and keep going with, trying to backfill other projects that are smaller to pay for the project that they're working on. They thought was going to be the moneymaker.
Yeah.
So it was wild to see that happen because, I'm going about my life. I'm, whatever. And then talk to them 6 months later and it's like, we still haven't gotten paid.
Oh yeah.
I go about my life 6 months later. Still, I was like, oh my gosh, how are you guys doing this? It's crazy. No. But it was a huge opportunity that put them on the next stage, but they paid the price on the front end.
Yeah. No, they paid for their own.
They paid the price of entry.
Yeah. And I don't think people have to do that anymore.
No.
I don't think they should. You shouldn't be held to that. And,
yes, I think that's the advice you're giving is very sound. That really it comes down to terms as a major factor.
And I look at it, and why wouldn't you want to pay them to be consistent at each time too? Mm-hmm. I'm thinking from the side, if you're the one footing the bill, mm-hmm. you're going to get more consistent help if you're paying at regular intervals too.
Right. Yeah, and I can't imagine even on a government level, like a brand level is one thing. You're talking litigation. That's the language of that.
Yeah.
But on a government level, you almost have to get political and get people involved that can speak for you to some degree at a lower level in order to move things. I mean, I don't know how they ended up doing it, but I can't imagine having to move that ball down the road when it's stuck, from a political standpoint.
Yeah. That's when you just pay an employee to sit at their doorstep until they
Yeah.
issue the check.
Go old school. Cool. Yeah. Well, that's a very valuable one for.
Yeah,
for
I'd love to hear,
people.
More stories of businesses and what they learned dealing with, situations like that, because there's a lot of good stories that probably formed them being better, but a lot of them, they went under from that and had to rebuild and had to start over.
Yep. 100%.
So
It's good. All right. On to the next one.